Welcome to this week's video where I discuss what I believe is important for individual investors to understand over the next 5 to 10 business days before they make their investment decisions. I'm going to discuss the market downturn. What is causing this market volatility to start the year? Timing markets, a topic I tend to talk about quite often, and it happens usually when markets are extremely volatile. And lastly, earnings season. We're about midway through, or perhaps maybe a third of the way through earnings season. Why is this earnings season so important for individual investors? Stay tuned. It's actually unbelievable to understand that about 4 weeks ago, we were at all-time highs right across all indices in North America. And here we are now with the NASDAQ almost in bear market territory, the Dow Jones down quite a bit, as well as the S&P 500. TSX is down a little less because we have a lot of oil on our market, but overall the markets have been down now for probably about 3 weeks. Why are these markets struggling as much as they are? In my opinion, it all has to do with interest rates. The market is trying to factor in all these interest rate increases that we're hearing about. What should the market truly be trading at? What should individual stocks be trading at? Are these stocks with high multiples justified, or are they too high right now? This is what's happening today with the markets. And every time you see the market turn down around 2 o'clock in the afternoon, as an example, you're seeing these selling programs really light up the screens. And you're seeing a lot of these programs just sell off anything that they can. So overall, it's not really individual investors that are panicking at this point. It's more the computers, the sell programs. But overall, it's the market trying to understand where the right level should be, or what the right level should be when interest rates are significantly higher. Trying to time markets, something most investors know they shouldn't do, but yet ask me about on a regular basis. Recently, I had a conversation with a client asking me, when markets hit all-time highs, isn't that a good time to sell? Because we know the market's going to go down. And I looked at them and said, markets have been hitting highs for the last, many years. And if we were to sell every time a market hit a new high, we'd probably all be out of the market at some point. So you really can never tell when to sell out of this market. At the same time, it's very difficult to know when to buy into this market. How do we know when the selling will stop? Over the last few weeks, investors have posed the question to me many times, should we get into this market, or should we hold and wait for better pricing later on? I wish I had the crystal ball to tell them that it's either time or not time to get into this market. So what I do instead, because I don't have this crystal ball, is I tell them buy good quality investments. Good quality investments rise over time. Good businesses will always do well. They'll find a way to do well and grow, even in difficult times. And that's what you want to do as an investor. Buy good quality companies that are cheap, and if they pay you a dividend, that's the best recipe for success. Corporate earnings season is well underway. We've pretty much gone through at least a third of the companies on the S&P 500, and we're just starting to get through companies on the TSX. I believe this corporate earnings season is one of the most important earnings seasons because we're coming into this earnings season on a down note. What's going to cause or help our markets recover? I believe it's corporate earnings. You see, the market is selling off based on higher interest rates or the potential for higher interest rates. But does that mean you should be going and selling off your semiconductor stocks? Should you be selling off social media companies? Will these companies do worse because interest rates may be 0.5 point to a point higher? In my opinion, the answer is no. So I think we need these companies to report good earnings, to tell us that everything is okay, and to tell us that everything will continue to be okay, even if interest rates should rise 1 point, 1.5 points even. So look forward to these corporate earnings over the next couple of weeks. We've already had a few really strong ones like Microsoft and Apple. But let's see what some of the others say, the Googles, the Amazons, the Facebooks or Metas of the world. Let's see how they're doing. And then we can decide whether this market is in a big downturn or it's a buying opportunity for future.